So I think when ad budgets stop growing, advertisers try to gravitate towards tried and tested large platforms, Google, Facebook, those are the ones. And smaller companies tend to have more experimental budgets that disappear. So in recessionary environments, in slow growth environments, we see market share of companies like Google and Facebook grow, and Snap and Pinterest probably are going to face more headwinds than what larger companies are facing right now. So that's the issue. And on top of that, there is mix in customers, mix in brand and direct response. So I feel Snap and Pinterest are going to be in this penalty box until the pie starts to grow, and perhaps it's not going to be until late this year, early next year.
Rohit, Evan Spiegel, the CEO of Snap, talked in the earnings call about Q1 being disrupted with changes that the company made to the ad platform. How do you see that developing going forward?
Snap is probably anywhere between 6 to 12 months behind, say, Facebook when it comes to adjusting to all the changes that happened to mobile advertising made by Apple. So Snap is adjusting to all those changes. They're trying to re-architect their ad tech. They're trying to do more direct response, bottom of funnel advertising, and essentially they're trying to redo various different policies and processes, and as well as technology that advertisers see. And it's a learning process. It is probably going to take a lot of experimentation for Snap, and those experiments would lead to some disruptions. What we heard on the 1Q call was just one of those experiments and one of those disruptions. I foresee more of these to come, but I think that's what a company needs to do. They need to continue accelerating these experiments and continue to learn from them, and perhaps come on the other side much stronger and much more kind of battle tested, if you will. Snap is probably in second or third inning of that series of experiments. Facebook went through all of that in early 22, and now late 22, early 23, they're seeing rebound. Larger companies have more ways to experiment, and I think faster turnaround as such.
I mean, also, I guess you could argue then that Facebook was doing it in a more healthy economic environment, right? A less slowing economic environment. So that creates an additional challenge for Snap layered on top of this. And then we haven't even talked about TikTok yet, right? And the competition that they are seeing. How are you thinking about TikTok right now, and what effect will a potential ban on TikTok? We're already seeing partial bans sort of around the country. What effect is that having, and could that have?
So TikTok has kind of firmly positioned itself right after Facebook, Google, and clearly above rest of the players in the industry. So I think when it comes to advertisers and when it comes to allocation or waterfall of how they think about ad budgets, TikTok has become a very solid number 3 player when it comes to this flavor of social media brand advertising, if you will. If TikTok were to be banned, I think from a sentiment standpoint, I think Snap is the one that stands to gain the most. From a fundamental standpoint, I think the dollars would be spread around more towards Instagram and then towards Snap. Needle mover change for Snap, less so for Instagram, given the scale that they already have. But I think from a near-term perspective, we don't. Our base case scenario is TikTok continues to operate. Perhaps they agree to some concessions. So in the next 3 to 6 months, while advertising is going to be soft, Snap continues to kind of see the headwinds, both from TikTok from a competitive standpoint, also from macro headwinds that ad spend is going to remain soft.
And you have a neutral rating on Snap. You have a neutral rating on Pinterest. Regarding Pinterest and what we saw from what Pinterest reported, what would make you change that neutral rating? What stood out to you in their earnings call?
I think if you would have heard the earnings call in isolation on Pinterest and heard the extremely positive tone from the CEO, one would have thought that Pinterest just had a fantastic blowout quarter. The tone from management is quite positive. They are bringing in new executives. It's fairly common when you have a new CEO, he brings in new C-level execs into there. So Pinterest in the first 1 year of the new CEO is bringing in new execs. So then the year after that, the entire team starts running together as a well-oiled machine. So we are on that cusp of that. So we like that. And secondly, they're doing these partnerships, the Amazon partnership that they announced. They're doing more shopping on Pinterest. So all these are good innovations, and I think bode well for Pinterest in the next 12 months. So good management team, good partnerships, shopping on Pinterest, those things should, in theory, start to help Pinterest fundamentals. Right now, the fundamentals and the tone are two separate stories, and I think at some point, though, both of them start to intersect, and probably that happens in 3 to 6 months. We need to see just essentially more traction in advertising via shopping partners, and probably they're showing the right seeds. Just need 3 to 6 months more.
Some great insight on Snap and Pinterest. Rohit Kulkarni, Roth MKM Managing Director. Thanks so much for joining us.